Uncle John, are you there? Yeah, you're the one. Amen. Thank you so much for that wonderful prayer. Yes, so here we are. So, colleagues, today, before we go to our weekly market analysis, like we always do, at least there's something to learn while we keep having the weekly market analysis, not only the weekly market analysis, but also trying to cover something important. Yes, so that as we keep on moving, your skill keeps on growing. Yeah. So now today, I would like to talk about trading in the sleeping mode. You know, trading should be very peaceful. Trading should be very peaceful in a way that you can enter the trade, go do other things, get back after a short while or an hour to monitor your trades. But then you find that most of the traders they don't trade like that. There are very few people who can place trades and then they they close them to five, do other things, trying to follow up onto other things, and then they monitor their trades later. There are very few traders. Why? Because like most of the people, they they come into forex trading because they know that there is what that there is money. But forgetting that the money which is in forex trading, it is money for those who are disciplined and those who are willing to follow the rules, however painful it may be, to stick to the rules, to be patient, and to stick to what they are told, not to just be, not to just focus on making money. You know, with the trading, when you just when you just want like to just trade anyhow, you can make money today, you can make a lot of money today, tomorrow you make a lot of money, actually even the entire week. But that will not be consistent. You cannot um close a week, second week, third week, a month, months, whereby you're having that consistency. It's not because of the way you trade. eh? You applied the same strategy yesterday, it gave you money, and today you just want to quickly scalp trades, make money, and then call it a day. It can profit you, but then it will not help you to be consistent. So, the best way for a trader to be consistent is only through making sure that you you do what? You trade in the sleeping mode. And one of the ways you can do it to trade the sleeping mode, it's through first making sure that um, you don't just trade from anywhere. huh? You don't just trade from anywhere, and you don't just take all kind of trades, but you focus on to quality. When you focus on quality, then you put risk in mind. You look onto the quality of that trade, just like today. Today, actually, I shared it in the different groups that don't risk into sales. Personally, I can see good selling opportunities in gold, but I can't risk them. I can't, because gold every day that has kept on passing, it has been proving just that it's strongly buying. So there's no any good opportunity for sales, and the best way to keep being profitable in gold, it's through sticking to that trend. I keep telling this thing, which even I've never read it through any, which even I have even never read it from any book, that when you stick to that trend, the market will always give you an opportunity to close your trades in a what? In a profit, not a what? Not a loss. There are some people I've been seeing some people trying to take sales. When you look here, this was a selling confirmation, actually a price action confirmation. But look at how strongly the power of the trend is. Market just sold a bit and then it bought. If someone, when we try to compare to traders, someone who was trading against the trend, someone who was trading against the trend and took this price action confirmation for sell, and someone who respected the rule that as a trader, the first thing that you have to make sure that you respect is trading in the direction of the trend. Well, look here, for someone who took sell entries, if he was lucky, he would have scalped in something. But if he kept on holding, the other one who entered in the direction of the market but didn't know, did, but didn't have any price action confirmation, you can say that still the market gave the opportunity for the other one who followed the trend to close the trader orders in profit more than it did to this one who took the sell retracement. Because when look here, market retraced a bit and then it bought. So that's the power of the what? That trend. So if you want to make sure that you want to trade in the sleeping mode, the first thing that you have to prioritize is making sure that stick to the trend, however painful it may be, or even if you are impatient, but stick to that trend. Hmm? Stick to that trend. This market is here to stay. It's not going anywhere. If today you have not got any opportunity that is in line with that trend, keep calm. Tomorrow is a day. Wednesday is a day. Thursday is a day. And more beautiful days in the market will be there, eh, than trying to just trade now, going against the trend, buying from resistance zone. Just be patient. The market will always come into your direction. And by sticking to that, you find that um, you will find trading lovely, peaceful, and you just actually just love it. You just love it. When you come on the charts and you see that there is no good entry yet, you relax, do other things, wait for the market to give you that opportunity, and then you do what? And then you take it. If it doesn't give you, then you wait for the what? For the next day. By doing that, you are going to be building a level of consistency whereby even if you are earning small, but it's something that is consistent, whereby every time that keeps on moving, your your connection with the charts will be growing stronger. Um, you'll be understanding the markets, you'll be able to communicate with the markets, and you'll be able to move capital from a small capital to big capital. So the power is in being patient, respect that trend, don't go against that trend, and trade. Focus more into buying from support and selling from resistance. These ones have always been, these have always been telling it to you. Then the other thing, to trade in the sleeping mode, respect risk and money management. Before you enter trade, don't only look at the winning side. Ask yourself that how much am I willing to risk on this trade? Or how much am I willing to risk per day? Mhm. Whereby when you know how much, when you plan for a trade before you enter it, you plan for risk management as you have planned also for the profitability side of it. Then you will trade comfortably. Risk what you can afford to lose by trade. If your maximum risk in a trade, let's say it's $20, you can divide and be like, $20. How much am I willing to risk per trade? And how many trades am I looking for to have? If you would like to have 4 trades maximum, then that means that you're going to be risking around $5 per each trade. And then you try to make sure you stick to this. You stick to this discipline. And while you stick to this discipline, the other order that you have to put in place is risk to reward ratio. Enter the market knowing that I'm risking $20 on this trade, but my target is to make my $20. I'm risking $20 on this trade, but my target is to make $40 minimum or $60 minimum. When you hit $60, meaning that you have made 3 times of what you are risking. And when you keep coordinating risk to reward ratio, um, how much you're risking per trade, following that trend, targeting to be buying from support zones and resistance zone, selling from resistance zones, you'll find that most of the times your trades will be giving a risk trade ratio of 1 to 3. Will be giving you a risk trade ratio of 1 to what? Of 1 to 3. Look at this trade. When you look here, I believe everyone is seeing my screen. Um, this trade, gold consolidated here. By the way, uh, I would like to appreciate those who keep on trying to practice. Yeah, some of you here, they keep on sharing their daily market analysis. And I believe you can also see that your level of understanding the market has also kept on growing, whereby at the end of the day, the market keeps following your analysis, just like you analyzed it. Mr. Desmond, I believe you can. Desmond, Desmond, Douglas, those these days you have not been sharing your daily analysis, but Desmond, Ambrose, I believe you can see how consistently you are becoming when it comes to interpreting the market. Douglas, I hope right now you can clearly see my candles. Okay, good. So when you look at uh, when you look here, gold was consolidating, but it was playing around this trend line support. Um, then actually it gave a good confirmation on M30 that resulted into this big move. This big move. So you can see that for people. Actually, my brother here, Ben, I believe you got this move in the morning, very early in the morning, and your trades. If your trades, I don't know if you trade them, but if you trade your trades, you can see that you'd be in really good amounts of money. Personally, I got this trade from around here. Um, Actually, I analyzed this market from Friday, and then I placed in my two buys from around here when I'm risking. Oh yes, brother Ben. Oh wow, with pending orders. Oh, that's beautiful. Pending orders are nice, and one of the different strategies that one can utilize to make sure that you trade with a discipline and you avoid the noise. So I also got this move. I was risking I was risking $100 on each trade, looking forward to make a minimum of $300. Meaning that even if my trades hit stop loss, fine. I had already planned for the risk, and I knew that this is a risk, but a risk will can result into a, a profit when there is success or a loss. So after knowing that up, placing my trades, but I'm thinking also about what I'm risking. I risked $100 per each trade, meaning that in total I was risking $200, looking forward to make $600. Then I left that trade. I left that trade. I woke up today in the at around 3 a.m. I trailed in some. I found them in good profit. I trailed them. I went to the gym. Then coming back, I found that my trades already were still in what? In good profits. I kept on trading them, though I was removed some. I was removed around the two 230 there. Yeah, with but when I have even hit my what? My target of 3 times. So when you apply risk management, you plan for how much you are risking, and then what you are looking for to make should be a minimum of twice of what your risk is. So when you try to keep trading this way, you will see that your trading will be changing. Then when you find that the trade is in good profits, then you can break it even. You can break it even and then leave it to move. Yes, so that will be helping you to trade in the what? In the sleeping mode. You place it trades, you know that I'm willing to accept this risk. It's fine. You leave it. And then last week I shown you how you can use MT5 to see how much you're risking and how much you are willing to do it and how much you are targeting. So I don't expect people. Right now, I wouldn't be. I don't hope to be having someone who is like, hey, I cannot tell how much I'm risking. I just apply the figures. No, you have to be in a position to know how much you're risking. If you're not willing to risk $50 to target $150, then don't enter it. Not to enter the trade. You see that it's in $20, then you just hurry to close. You miss big profit. Big profit in the market is in what? Is in being patient. Yeah, so try to make sure that you plan for your trades before you enter them, respect that trend, and stick to your trading plan. By doing that, you'll be able to have trades that are in the sleeping mode. You can place trades, then you can leave them, sleep, drive, do other things, monitor later. Yeah, and by doing that, you also be having peace. You don't just enter the market and then you just be there panicking. You just be on stress. When the order goes into $5, you are risking even almost $50, but the order has gone into only $5. You hurry to close it. No, that will not be helping you to do what? To grow the skill. Yeah. So that was something I had for you today. Now let's get back to our weekly market analysis. It's very clear that gold is targeting 3,000. It's targeting 3,000. This is the target. Gold is targeting 3,000. And chances are high that it's going to reach there because of um, this, this tension. There's tension global. There's tension in the entire world. Globally, there's tension. Um, Trump has brought a lot of tension. Different statements are being made. I'm sure you have heard about the statements above him closing USAID, and even other statements. So, when you try to look at the fundamental part of it, all these are facilitating gold to keep buying. Personally, I can see I do expect a retracement in gold, but I will not take that risk because of how strongly gold keeps on showing when it comes on the buying side. So, all the fundamentals are supporting gold to keep buying, and that's our first what? That's our first point, that we are still into the buying zone. Yeah? We are still into the buying zones. The only thing that you have to do, by the way, also get this thing, um, no matter what winning strategy that you may have, no matter what kind of art race that you have, but if you cannot manage risk, then you'll be missing out. So try to make sure that you trade applying risk management, because it will help you to stay in the market looking for to bigger what? To bigger targets. Yeah. Now looking on our pair gold, it's targeting 3,000, and all fundamentals, um, the statements being made globally, um, they are all supporting to do what, to keep on buying. Remember, gold, it's a pair uh, whereby it's gold versus the United States dollar, meaning all kind of news regarding the United States dollar, there's a way it's affecting gold to keep buying or to be going down. So all fundamentals are supporting gold to keep on buying. As you keep on moving, still keep on focusing more on to what? Onto buying opportunities. Yeah, the target is $3,000. And then we the other thing is, there can be there we are still going to be moving the same way I've been moving, whereby there is some kind of consolidation, trying to confuse some people that God is going to sell, and then it rallies back to the what? To the buying trend. So when the market gets into consolidation, just like it did last week here, still focus more onto the buying opportunities, because the buying opportunities will be buying more than how the selling opportunities will be selling. So still expecting more consolidation, but then still focusing more onto the buying opportunities, because buyers are so strong. eh? For those of you who have the systems that we use to check on the to check on the strength of the market, I believe you can see that the whole of today, all major time frames have been strongly buying. They have been strongly buying. When you check on FX Helper, you'll find that um, D1 it's been above 80, week one above 80, and we also remember that we analyzed last week. We had a wide analysis where we analyzed the monthly time frame. And you remember, by the way, everyone who has been attending these sessions, you should be from last week. Um, you have to have been making money, because we analyzed gold and we saw that gold was going to buy strongly from the middle of this last week and even this month. Yeah. So we had that wide analysis on a monthly on month on MN monthly time frame, and even weekly time frame. They were all doing what? Supporting the buying side. So I hope you guys are making money and are learning. Yeah, not just to keep on attending, not learning something. Yeah, so this is something which is in place for everyone. The weekly market analysis is so free of charge to everyone. So utilize it to keep on learning and utilize the opportunities. Yeah. So now looking on gold at on D1, buyers are crazily strong than the sellers. Um, So now looking at gold on D1, it has reached the trend line resistance, whereby we can expect in some sales, but I repeat, gold is crazily bullish. Gold is what? Gold is strongly bullish. When it comes to market structure, this is what we can expect. This is what market structure tells us, that we expect gold to retrace back here, and then it bounce off, and then it bounce off to continue its what? Its bullish trend. But you remember the other thing that I told you, that you don't ignore the candle bodies. The candle bodies communicate a lot how strongly that side is. So this is what we can expect. Um, According to market structure, we expect retracement here, to get this market off from the trend line resistance of this buying trend. But then I need everyone to listen very well to this. We do expect retracement for sales to get in, to push this market back to what? Back to trend line resistance, so trend line, yeah, trend line support, or back to this horizontal support. Yeah, that's what the market structure is telling us. But then go buyers are so strong. This card is not having any weak, and it just keeps on being strong. So for sellers to prove to us that there's going to be good retracement, they need to apply rejection here. Today has to close with a wick that is not too small, and then that will mean that tomorrow, um, and then that will be meaning that tomorrow will start when it's selling more than it will be buying. But when they fail to do that, for the early body traders, those who wake up very early in the morning to take trade, when gold closes with a full bodied candle, just know that tomorrow will start when it's buying strongly, because there's this pressure that is still being applied. And then when they go when the candle on D1 um closes with a full bodied candle with no wick, it means that pressure, it will definitely open the next day, and that is Tuesday. So right now, for us to know that, for us to start thinking of, to start planning of, to start trying to look for selling opportunities, sellers have to apply a lot of rejection, and then um, and then they have to first form some kind of what, some kind of trend. Yeah, but before that, Okay, like they have to form some kind of trend on H1, but when they don't do that, still tomorrow keep on doing what? Keep on buying. The other thing is that when you look at price action, if today closes like how this candle is, it will have closed with a price action formation over morning star. For those of you who know the morning star, it's a combination of three candlesticks, whereby the first one is the opposite. This is a bullish morning star. The first one is bearish, then followed with these two bullish candlesticks. So, if today closes big with this big bullish bodied candle, the one will have given us a formation of a morning star, a bullish morning star, communicating more what? More buying opportunities. So still tomorrow there will be few sales than the what? Than the buying opportunities. Yeah. We have that is when we are looking onto the side of the candlestick body strength and even price action. They will all be in support of what? More buying opportunities than what? Than the sales. So keep on looking for what? For buying opportunities. And then the other thing is that for seller, for we're going to have more buyers still than sellers. But then for sellers to get our attention and for us to start thinking that, oh wow, right now sellers have confirmed us that they are going to push the market down to retrace. On day one, on day one, a candle will have to close when it's a bearish price action candle. Or if sellers try to manage it, try to close tomorrow's candle in an indecision bearish candle, then it will be meaning that Wednesday will likely sell a bit more, will likely sell a bit more or consolidate. Yeah. But then, like, still, no. It will be meaning that if tomorrow, this is how it's going to be. If tomorrow sellers manage to close with a price action confirmation telling us to sell, then we shall be expecting some sales on Wednesday. But if sellers fail to do that, personally, I don't see myself taking any risk into what? Into selling opportunities until sellers give us a price action confirmation that is confirming us that they're going to do what? They're going to retrace. And if we are to take those sales, we shall have to have a confirmation of at least a medium selling trend. Yeah, meaning that we shall not just hurry on to take sell entries. We have to be very keen. Sellers will have to first build some kind of a medium trend for them to prove us that we have come. Then that's when we can start giving them our attention. But if not that, please and please don't risk into sales. Yeah. So for sales, we're waiting for a price action confirmation D1, confirming that the market is going to sell, and that is most likely to happen tomorrow. Yeah. But when this candle closes with no wick, okay, like with no wick up, still tomorrow we'll be buying more. But when it closes with somehow a tiny wick up, then it will be communicating that tomorrow we'll start selling a bit, and then later in the day to continue into the buying what? Into the buying side. Yeah, so how today's card is going to close, it's going to be so important to determine the next move on gold. But like I've told you, we are strongly bullish. For selling opportunities, sellers have to form at least some kind of a medium selling trend that is having clear lower highs and lower lows. But before that, don't look forward to taking sales. I hope that is very clear. Yes, Douglas, for raising a hand. Mm, mm. The trend, actually, it's going to be this. It's going to be this. No, it should be this normal trend, these normal short trends, just like it's been doing. Let me show you some kind of example. Mm. Actually, these are the same ones you have been seeing. Mm. No man can do. So this is H1. So there will be this kind of trends. These ones. At least if you can identify like at least two swing highs, swing lower highs and two lower lows, then you can just apply your trend lines and then you do what? And then you do your you wait for what? For the market to get back to the trend line resistance or horizontal resistance, then that's when you can look for selling opportunities. Yeah, but before that, before anything like this, don't risk into sales, even though we're expecting some kind of what? Some kind of retracement. And then take sales, if it when it happens, take sales only from resistance, trendline resistance or horizontal resistance, because by doing that, you'll be respecting the fact that we are in the actual as you can see here. mm, just a minute. As you can see here, gold is in a wide trend, bullish trend, but it's been having in some kind of what? Some kind of medium selling retracement. So it's going to still be like that. Don't expect sellers to buy more than the buyers, to sell more than the buyers. Have some newcomers here. So don't expect sellers to sell more than the buyers. There'll be just small selling moments like this one. Yeah, but just use the trick that I've given you. That, aha, like this one, like this one here, whereby, and then the other thing is that if retracement is to come, it will be moving, targeting the trend line support. Yeah, so at least when you have, now like for example here, this market form this swing high, then lower high, lower low, then um, this would be a trend line resistance. So this setting trend based on these two swings, because this one is lower than the previous one. And then as this market retraced back to the resistance, sell opportunities were taken here. So then this market came back, consolidated a bit, then sold. So um, for selling, same thing here. For selling opportunities, just a minute. Yeah, so selling, for us to take sales, sellers need to first form at least some kind of a selling small trend. But before that, I don't see any good opportunity for sales yet. Yeah. So this is how it's going to be. Right now, looking at H1, the market reached already the trend line resistance. So the market reached already the trend line resistance, whereby we're expecting sellers to sell and push the market back to this horizontal support. Actually, they should push it back to this level. Mm. Small these lines. So sellers need to push the market back to this level or up to this point, and this can move in this format. Um, and that is why I'm telling you that if sellers haven't confirmed us with some kind of a medium selling trend, don't do what? Don't risk into sales. So sellers will have something like this. Then that's when we can opt for trying to look for selling opportunities from trend line resistances, trend line resistance or horizontal what? Or horizontal resistance. Yeah, so we can expect something like this. Yeah, and they have to form this. They have to form this tomorrow. If at all they are to be in control of the market, but just like I've told you, don't take selling opportunities before confirming something like this on H1. Yeah, and then if today closes with no rejection, no weak on D1, still we shall be expecting more. Actually, tomorrow still we shall be having more buyers than sellers or consolidation, unless unless sellers manage to push the D1 candlestick at least medium, at least for it to be in its what sellers will have to, for sellers to fully be in control of tomorrow, they do want to, they have to, before today closes, they have to push the do one time frame for it at least to be halfway, for it at least in the middle of it, at least up to here, at least up to here. There we shall be very sure that tomorrow we're going to be having more what? More sellers. But before that, tomorrow sellers will be a bit few as they look forward to create their their own medium trend so that we can trust them for us to take in some trades. Yeah, but before that, don't risk into what? Don't risk into don't risk into selling opportunities. Then the other thing is that um, now let's look at our area of attention. Mm, the other thing is that as gold keeps on trading above as gold keeps on trading above 29, as it keeps on trading as it keeps on trading above 29,000, sorry, as it keeps on trading above 2,900, keep on focusing on two buying opportunities. When you wake up tomorrow and gold is still trading above 29,000, don't risk into sales. Don't risk into sales. Um, and then the other thing is that mm, still same thing. Mm, for sellers to confirm us that they are fully in control of the market, at least they will have to push this market below 2890. Yeah, below 2890. Then with a clear lower highs and lower lows. Then we focus on to buying from what? From resistances. Yeah, but as we keep on trading above 2890, above 2890, still we expect more buyers than sellers. And then as the market keeps on moving above 29,000, don't try to think of risking into what? Into sales. Yeah, so those are our two major areas of attention. This one here, above 2890, still keep on focusing on two buying opportunities. Yeah, if sellers close below 2890, then we can try to think of selling opportunities, but don't forget what I've told you, that they should give us clear trend. Yeah, so that means that we don't need to be on panic. We need to be patient. If sellers are going to do that, then we can wait for it, and then we start looking for selling opportunities, as sellers will be looking for to retrace up to here, so that buyers can get in back from here, looking forward to 50,000. Yeah, but above 20, above 28.90 and 28 and 2 and 29 and 2900 or 2,900. We are focusing more on to buying opportunities for sellers unless there is a clear trend, selling trend that has been formed. And if the market tries to, actually, this market can also consolidate within this range. It can consolidate here. If it keeps it, when we wake up tomorrow and the market is consolidating, still focus more on buying opportunities. Yeah. So we can expect in some kind of consolidation before the buyers rally their trend back, and that makes us to also keep on focusing more onto the buying opportunities. If sellers manage to give us a medium trend, that's the only situation we can think of selling opportunities. And when on the one, and when sellers close close at the one time frame with a price action selling confirmation, that will also get our attention to think of what to think of